You know how many social media posts I've seen lately going, you know, we here at Name Your Real Estate Firm, we're not worried about the repricing circumstances. We're just trying to stay in our lane and focus on providing value for our clients.
Yeah.
And because we know we can provide value, we're not concerned with this. So don't worry about changing the paradigm. Worry about providing value to your clients because they'll pay your fees for that. I'm like, bitch, please. You need to be concerned.
Yeah, man.
This is the beginning. This is a tsunami, and you're seeing the waves pull back, and you're going to say, we're not worried here at Laguna Beach of a pending tsunami. Yeah, the waves are going out, and it looks like a tsunami could be hitting us, but we're really working on providing a great visitor experience.
You know what I can see? I can see the bigger institutions really profiting off this.
Oh, so a listener who hit me up today said something, and I have to research this, but he said that in Australia, they don't actually have as much of a realtor-like presence there, that they predominantly drive off of the sales platforms. Like they have their equivalent of like Zillow and Redfin there is actually where the majority of the transactions happen.
Okay.
So I want to look into that in a future episode, and I do want to cover this kind of home price crash article from the Kobeissi Letter here coming up. But that'd be an interesting kind of foreshadowing of what could happen.
So even let's put Zillow and Redfin aside. I could see a world where Berkshire Hathaway, right? Their agents there. I can easily see them be like, all right, you got to take in this many buyers, and charge them a really low fee, and then you get leads on to sellers, right? I can easily see a world where that happens.
Give me a little more color.
So, for instance, like, if right now sellers aren't having to pay buyers commissions, right? And the agent for the buyer has to negotiate, what their fee is going to be up front, right? Yeah. Charge a really low flat fee for buying the property.
Oh yeah, you're just talking about moving more like volume based.
Yeah. It's like kind of like like any business that you're trying to scale. You do a lot of free work up front early, and then you get paid out really on the back end later.
Well, and this is so every single D-bag who sells something like on social media and they offer like a low cost or low ticket buy-in.
Yeah.
What they're really paying for is they're paying for your email address or your contact information.
Exactly.
And they might spend $100,000 selling you some $3 or $5 tchotchke, right?
Mm-hmm.
And they may earn back like 90 or 80,000, but they basically got tons of leads for $20,000 or $10,000.
Easy money, right? And they already know a majority of the people out there, like, oh, that company took care of me last time. Now I'm just going to go through them this time and accept that cost now going into it because they took care of me on the last deal, right?
But that is 100% the way the real estate world and commissions are going to go.
Yeah.
And I know that people are going to disagree and they're going to be all sorts of salty about that, but allow me to express my respect adjacent thoughts on this. I don't fucking care.
Respect adjacent, so good.
Yeah, put some respect on my name.
Yeah.
Adjacent to it anyway.
Like Kobeissi.
So the Kobeissi Letter. Breaking news, according to the Kobeissi Letter. Obviously, this was breaking news several days ago because we don't report in real time, kids. We report in real time.
Yeah, it's our time.
Yeah, it's our time.
You're on my time right now.
You know our time is a dating website for old people, right?
No, it's not.
Yeah.
Our time?
Yeah.
Like, how do you spell it?
Our time.
Our?
O-U.
Yeah. R. No, you said our. Our time.
You're not gonna do this right now.
Our.
I normally would talk shit.
When you said our time, I'm like, is it rated our time?
When
what's going on?
When I do the thumbnails, I use Captionator. I use this AI generated tool to help take our voices and make a visual representation in the form of sub captions.
Oh, really?
Right. Yeah. And when I do the captions in the videos, for somehow you always come off very clearly translated, and I come off sounding like a complete jackass.
Why?
My voice sucks, dude. It's so deep that it, like all the words mesh together. I don't enunciate. I don't know.
You got a good podcast voice, though.
You would think so, but not according to AI.
No?
AI likes you.
Okay.
AI does not like me.
Thank you, AI.
New home prices are now down 20% from their highs. Key point here to differentiate. These are new homes that are being built, brought to the market, not existing homes.
Right.
Anytime someone talks about housing data, you should typically hear of that as being the key differentiator. New homes delivered to the market, homes that are being built and delivered to the market to solve the supply and demand inventory issue.
Right.
Versus existing homes in the market that are being sold from people leaving them and moving out.
Right. So, and just to recap off what the last article Chris touched on, just so we can compare the two, he said this is from Redfin. Median sale price came in at $412,000, right?
Yes.
That's up 6.5% 12 months ago, a year ago. That's year over year. So median sale price of all homes up 6.5%. Okay, but this is saying new homes.
Yeah. So, and that's how data can be manipulated, kids. This is the Dave Ramsey school. You know, we're going to focus on the 6% up increase in the sales information. We're not going to look at things that might portray a negative image of what it is we're trying to say.
Yeah.
Well, let's give you the other side of the coin here. So new home prices down 20% from their highs in bear market territory. Bear market, not good market. Bull market, good market. Bear market, sad market. Okay?
Yeah. Explain the difference between the two.
A bull is aggressive. We'll poke you right in the ass. A bear, aggressive, but will scratch you.
Yeah,
like a bitch.
A bull's going to hit you up and a bear's going to swipe down.
Oh, there you go. Yeah.
Yeah.
It's relatable. And it's falling faster than rates seen in 2008, according to Reventure, one of our favorite data sources. New home prices peaked in late 2022 at $497,000 whopping dollars and have fallen to $401,000 as of the latest data.
Now you can see that, right? If the median sale price of a home is going to be $412,000, right? Then a price of a new home should be higher than that.
Should be.
Right.
But now?
Not so much.
Not so much. Which in my mind foreshadows, kids. In the financial crisis, new home prices dropped by 23% from 2007 to 2010, according to Reventure. Now we're seeing already a 20% drop from 2022 to now. Imagine how much more room you have down to go.
Yeah, this really hurts the home builders, right?
It does, yeah. We are down roughly the same amount in just 1.5 years, or half of the time.
Yeah, man.
Still, new home sales prices are down 20% above pre-pandemic levels, and existing home supply is near record lows. Is the housing market beginning to crack? Well, kids, according to this sexy chart that Haroon put up, and I know you can't see, all charts have a squiggly up and down when you look at them real close. And when you zoom out,
peaks and valleys
go away, and it's just straight lines up. And this chart would have you going mostly up until the Great Recession, where there was a spike downward. And while there is intermittent ups and downs in between, it pretty much rose steadily all the way up until 2022. And now you're seeing a dramatic drop-off from that $497,000 number down to $401K, tantamount to obviously what we talked about earlier, 2022, but certainly on a trajectory almost as fast as the rise from 2020 to 2022. And that should be concerning.
It should definitely be concerning. So, earlier we talked about Jay Powell at the post-game press conference, and one of the reporters asked him, with housing data and what's coming out, clearly we said it's up now 6.5%, from 12 months ago, right?
Yeah.
Median sale price of all homes. They said, how does this fit into the inflation picture? We know that housing makes up a majority of inflation, right? 34% if you're looking at CPI. And he said, we're confident that we think we can get inflation down to 2% even if housing doesn't come down. And I was looking at him like, the fuck are you talking about, dude? It ain't getting hit 2% if housing doesn't come down.
Yeah, I don't really understand.
Like, are you buying the crock of shit? Like, what are you saying?